Amit is saying somewhere you mentioned that when we enter low usage area, we challenge the opposite side first and then make balance. And he says that can we take it as a rule? No, you cannot take it as a rule because see, you need to understand these are tendencies, all right? These are tendencies. Even you will find it happen in case of balances. So let's say merge this. So now what we have is a balance. Make sense? And that 80% rule that was very popular a few years back. This is similar to that, but I'm not using value areas or anything like that. I'm not using it as a rule, but tendencies like you start finding acceptance inside of this balance, it is likely that you will test the other end. So here that tendency was fulfilled. Now if you go to a little higher time frame, let us look at some low usage areas. You can see there was this balance, then we imbalance lower, we formed this balance, and then there were some intermediate balances. Even this balance was there, and then there is this low usage area. There is this low usage area and there is this low usage area. Now we completely reject to test this and fill this low usage area. We go above that and see where we go. We straight away go to the opposite end. Then we come back down and fill into that low usage area to continue moving higher again. So yes, this will happen. This is a tendency, not to be confused with a rule. Okay, because then you are making it a setup. And then every time there is some kind of development like we have here now. This is the HVN, makes sense, around 18,800. This is the previous HVN. And now what we have, let us use that tool. Now what you have here in between is the low usage area. Now what I said, it's a tendency that market may not, gradually keep filling this area. It will spike lower and then it will move sideways. Now what can happen, it can come, go up, and do this dance, then go lower and hit this lower reference. So instead of like nicely going lower and then filling, it can do some stupid thing and then spike down again. So auction can take any shape it wants. It is not bound by any rules. It won't care for what you think, what market profile thinks, what auction theory thinks, nothing. Traders, majority of the traders are not aware of all these things. Institutions are not probably looking at all these things. Let's say some institution is there, a new client comes to them and they tell them, let's say a big institution, okay? They tell them that, okay, we feel that based on our business transactions, we have a lot of interest rate exposure to Asian countries, or let's say specifically India. If Indian interest rate change or our interest rate change, I think our situation is not very good. Okay, let's say tomorrow RBI comes and drops the interest rate, it might affect us adversely. Now what is happening is, let's say they have some 100 million or so of exposure. Now what is happening is this firm is tasked with balancing that exposure. So to balance that, they will have to trade into currency derivatives, they'll have to trade into interest rate derivatives, they may have to make some investment, withdraw some investments, and all these things will happen. Okay, and they may have a big few $100 million portfolio that they want to balance now. Now, if they give this task to a particular firm, what they will tell them? They're not going to tell them, okay, this is a third wave going on, or this is a harmonic pattern, or this is a market profile structure that is happening, or this is the HVN, this is the LVN. No, they're not going to talk all these things. They will give them, let's say, a range, because obviously, if you have to execute a few $100 million of, whatever interest rate swaps or currency swaps or whatever it is, they want to execute that, there will obviously be impact on the markets, and otherwise also market will move. So they will give them a range that, okay, we will try to execute it in a certain fashion. In fact, when they are executing, their execution is what is going to affect the markets, other traders, who are tracking their actions and all those kinds of things. So that is how, their order will be executed. Now, they are not bothered with any of the technical analysis method. Why are we bothered with it? Because there is no customer that we are catering to. Someone is not coming to us and telling us that I want to execute $100 million of Nifty futures. You execute it for me. Make sense? How are you going to do it? We have no idea. We have 1 lot, 2 lot, 10 lot, 100 lots that we are dealing with. They give us a big order. We will not be able to manage that. when these institutions, they come and they execute their orders in the markets, what is going to happen? It is going to create footprints. It is going to leave behind, breadcrumbs or signs that we have transacted or we are transacting, and we are going to do it for a long time because we have a big order to execute. Make sense? Their actions is what is going to be visible on the charts, and the tools we are using, they are there to help us figure it out. That's it. The point I'm trying to make here is that, they are not using any of these tools or any of these things. Their actions will create some footprints that we are trying to pick up. Because, sometimes when you have some big institution playing, the pattern may work out fantastically. If that institution is not playing in accordance with the pattern, or their actions are not, matching what you expect of the charts, it may not work out. So, so don't convert it into a pattern or a setup. Try to understand that these big institutions, their actions is what is going to reflect on the chart. They have a certain way of behaving, and that is why some of the patterns they repeat, like balance, imbalance, balance, imbalance. This will keep repeating to eternity. See, balance, imbalance, balance, imbalance, balance, imbalance, balance, imbalance. What is happening? Now you have a balance to the opposite side. Another imbalance. Small balance, another imbalance. Now you have a balance and now another imbalance is going. Now this is where it has changed. Started imbalancing to the downside. So what is happening here? It's the behavior is changing. Probably they were accumulating or they were executing a buy order. Now they are executing a sell order, or whatever is happening. Big players are playing their trading actions are causing these market developments, which we have to follow. Simple. We don't know whether they are buying or selling. They're not telling us what they want to do. They are keeping their clients' business secret. So their actions is what we are going to track, and it's not going to repeat exactly every time. So if you try to convert it into a setup or a pattern, you will pay the price. You will fail, like so many are failing using technical analysis, because they are not focusing on the behavior. They are not understanding the fact that it's not compulsory for the markets to behave in a certain way every time. It will do its own thing, because the business that is coming in from the institutions, from the higher time frame traders, is a little different. It's not guaranteed always. Like it's not like clockwork. Yeah, sometimes there will be a sudden need to manage a lot of business, and that will create big moves in the market. And sometimes they can just take care of business very, very slowly. So that is how these things work.